a lot of us want to get to the properties and get those properties we can make mass amounts. But don't turn away from this. You guys remember that Warren Buffett quote? He said, to paraphrase, if you don't find a way to make money while you sleep, you'll work until the day that you die. And if you remember, I bought that lien in the beginning for $60. It's already earning me interest as we speak. So that's what's so great about this and why it's such a Wall Street darling. Now I know, of course, the goal for all of us, for most of us I should say, is to acquire properties. So how does that happen? Well, let's say that this property we're looking at right here, let's say that that redemption period of 1 year expires, but nobody ever paid. What happened then? Well, if you said you got the property, you're on the right track, but they don't just hand you the property. You actually have to go through a legal process to acquire it in tax and certificate investing. Now, that process is different everywhere. Some places it's going to be a foreclosure. Sometimes what's called tax deed application. There's some other variations in this also. And there are generally some fees. But once you've done that, that means you've acquired that property at a massive discount, usually pennies on the dollar, and you can do with it what you choose. Now, if your goal is to acquire properties this way, the more knowledge you have of when, where, and how to invest, the more likely it is to actually happen. So you definitely want to call in to qualify to work with us if your goal is to acquire properties, because we have investors that consistently do these types of things on their own and educate investors like you how to get the best chance to acquire a property. And I know there's some additional questions. Let me answer the two most common questions that I get. One is, what if you don't want the property? You never have to take it. You're never stuck with it. If the property has value, you can defer it to the county, let them sell it. When they sell it, they're required to pay your money back plus your accrued interest. So there are ways out, multiple exit strategies. What happens if there's still a mortgage attached? If you remember what I mentioned earlier, I said we'd come back to this. So in an example, let's say we bought that lien, redemption period expires, and we suddenly discover when we go in to take ownership of the property, there's a $180,000 mortgage against the property that's still owed to the bank. Well, because we did everything the correct and legal way, what would happen to that mortgage in this case is, for us, it would be cleared. You would never assume the debt on that property, and that's by law. Now, hopefully you love that. It sounds awesome. But I know some of you are probably ready to pull your hair out right now, so let me, like I said, I appreciate your patience. Here's what will happen usually. Many will say, well, does that happen? Will it happen? Can it happen? Yes. Does it happen frequently? No, especially in a strong market. What's usually going to happen is if there's a big mortgage attached to a property, the lender holding that mortgage is usually going to step up and clear the lien early, which means they're going to pay it off early. When they pay it off early, it stops us from acquiring the property, protects it for them. But remember, legally, it can't stop us from getting paid. They still have to clear the lien. So we're still getting our money back plus interest. What's cool about this, for those of you that are saying, well, I failed, I didn't get the property, wouldn't you rather fail upwards and make money and fail and lose money, or right, break even? That's what's so great about the strategy and why Wall Street loves it, because even if we're not acquiring the full potential of what we can get, we're still making money along the way. And many don't realize there are hundreds upon hundreds of thousands of these opportunities all around us online, ready to be purchased against, get this, tens of billions of dollars worth of real estate, which I will show you again live in just a few moments. And why it's so important to call in to qualify to work with us and find out what type of investor you are is because you all probably have different ideas of what you do in these situations with these properties. Some of you want to acquire a property at a massive discount just to move into it for your first home or maybe a vacation home. Some of you want just a rate of return. So I'll give you an example right here so you can start to see what you want to figure out for yourself. So when we talk to you, you know, this is the type of investor I am, or a combination of these. So you bought this lien for less than $5,000, hypothetically. The assessed value of the property is $173,000, and the market value is $220,000. So let's say we do that fell upwards thing, and all we get is our money back plus interest. Well, this county's 18% interest in a 2-year redemption period, which means you have the potential of walking away with over $1,600 profit on an investment that was less than $5,000. Now, if that's not impressive to you, take $5,000 and put it in the savings account for the next 2 years. Put it in a CD. Now, some of you may be saying, or maybe an IRA or a 401k, you definitely want to call and qualify to work with us because we may be able to show you how to invest in tax liens and deeds and other forms of real estate through your IRAs and 401ks where it can be tax-free or tax-deferred. It's a great investment strategy, in my personal opinion anyway. And some of you are going to say, well, I don't want to wait 2 years, it's too long. Well, that's okay. Once again, you definitely want to call to qualify to work with us because we can show you different ways to accelerate that process, things that even seasoned investors have never even approached. Now, some of you want to take ownership and turn this into a rental property, cash flow. On a low end, this would cash flow $20,000 per year. Now, those of you who are probably closer to what I am, and I just want a big chunk of money in this case, well, I would tell you to sell it quickly, and sell it below market value for even assessed value. If you sold it for assessed value, that means you have potential of walking away with over $150,000 profit without ever leaving your house or stepping foot on this property. Some of you will be having one of those every 18 months. Now, I also know that some of you want one every 2 or 3 months or every single month. Baby steps, everybody. Now, I know some of you are going to call me up and say, what's the asterisk for? Well, remember, when you get the chance to take ownership of these properties, they don't just hand it to you. You have to go through that legal process, and there are usually some fees. And they're usually very minimal compared to the cost of the property. But think about it this way. If it was another $5,000 to take ownership of this property, is it worth it? Hopefully you all said hell yes, because remember we focus on ROI? That means you're acquiring a property worth over $200,000 for less than 10 grand. If you already built up your own wall and said, but I don't have the 10 grand. Remember, it's scalable. Start with the inexpensive liens and start to build up. We know investors that could possibly work with you that could make it mutually beneficial for both of you. Just to give you an example of what can be done. Now, I've only shown you 2 ways to make money so far. Double-digit returns if done properly, or acquiring assets, the actual properties. There are other things we can do, like overages and excess funds you may have heard of, or even reselling the tax liens and deeds themselves. And this marketplace is only expanding and growing. I mentioned that a lot of people consider or think that hedge funds and banks buy up all the inventory. Well, this may be shocking to you to see the actual numbers behind this and how we're all affected, whether we believe it or not. According to the National Tax Lien Association, prior to COVID-19 actually hitting, we were already averaging more $15 billion a year in unpaid property taxes. $15 billion. If you don't think it affects you, let me ask you these 5 questions. Do you live in an area that had all the equipment that you needed during the pandemic? Are your schools in great condition? Are your parks in great condition? Are your roads in phenomenal condition and have no potholes? And you pay your teachers extremely well? If you answered no to any one of those questions, then it directly affected you, because the vast majority of that money comes from property taxation. And it's only getting worse before it gets better. According to their studies, they guesstimate that's going to jump up to $20 billion in delinquent property taxes by the end of this calendar year. Not years away, this year. Well, what does that mean for us as savvy tax lien and deed investors? More inventory. As you can see in that final line, it says increasingly America's cities and counties will be turning into tax lien sales, whereby local governments' budgets are fully funded through us, private investors. The money's never been needed more than right now in many areas across the United States. The challenge is, well, how do we buy them effectively? What I did in the beginning is not the traditional way to do this. So let me turn on my camera for a minute so I can explain this to you. The way that most traditional sales happen, this is where most people tend to go wrong or get bad information, because they learn from an uncle or an aunt that did it 20 years ago, and they say this is the only way it can be done. Or they watch that infomercial or YouTube video or TikTok, and they think it's the same everywhere. Remember the green and blue map that I showed you earlier, green, blue, and red? I said this is the way it breaks down. That was the simple map. And I don't show this to you to intimidate you, it's to educate you, so you can see where so many investors go wrong. Remember, the sales are not conducted by states. They're conducted by local governments. And there are thousands of local governments across the United States. It's not counties, everybody. It's counties, cities, townships, municipalities, parishes, wards, districts, and boroughs. It's all of them combined. You have cells within cells. Cells are different all areas. Some do it once a month. Some do it once every 6 months. Some do it once a year. And part of the reason we have so much influx in inventory right now is because many areas couldn't hold their live cells last year because of social distancing. So they're holding on to 2 years' worth of inventory. And remember, each area, they have different redemption periods, the laws, rules, and regulations are different, and the sales are conducted differently. Sometimes you're bidding up the price, sometimes you're bidding down the interest, in some areas you're actually doing both. There's even more complicated things than that. And then what will happen is, if you decide this is where I want to invest, you research it, then you have to register. And you're seeing more and more areas charging for registration. You can see right here, a non-refundable $150 registration fee is required. That's just to participate in the sale. Once you've got your registration paid for, then you have to acquire a list of inventory that's going on for sale. And these lists are different everywhere. Sometimes they're lot and block numbers, parcel ID numbers, map coordinates, could be anything, right? Not only that, some areas will give it to you for free. Some areas will include it during registration. And some areas, like you're seeing from the Northeast to the Midwest, just flat out charge you for them. This is Cook County, Illinois. This is Chicago, 18% interest, which is great. But $600 for their list every time they have a sale. $600. Imagine doing that through multiple counties across the U.S. Well, for those 30 of you that get selected to work with us, we're going to show you how to acquire those lists without having to pay for each one individually. Of course, once we've registered, then we have to pay a deposit. The deposit can be hundreds to tens of thousands of dollars. That money is your money. It goes towards your purchase. But if you don't buy anything, let me come back to that, then you do get the money back. But why do they require us to pay for registration, get these ugly lists, pay for deposits? What they're doing is they're eliminating the tire kickers, the looky-loos, and the wannabes. They do it that way. Now, it's not the only way to invest. We showed you that in the beginning, but this is what many of these areas want you to believe, is they only want to deal with serious investors. And of course, once we pay the deposit, we participate in the auction. If it's a live auction, face-to-face, if you win, we're usually bidding the price up. If we win, we have to pay that day in full, and it must be in cash. Now, sometimes they allow you to pay by cashier, check, or money order. This is in Oklahoma. If it's an online tax sale, then you have to pay by a certain allotted amount of time, like you can see in Florida. If payment is not made by 11 a.m. the following business day after the sale, your deposit will be forfeited. So you just kissed goodbye your $500, $1,000, $5,000, whatever it is, and you agreed to it, even though you didn't read the fine print, because you participated in the sale. And of course, they also penalize you, like here in South Carolina, as I'm showing you. They don't keep your deposit, but they fine you $500, and then if you notice the line right after that, you are then barred from all future tax sales, indefinitely. And this is where I see so many people go wrong. Because they learn from somebody who did it in one place, they say, this is the only way to do it. They don't realize each area is completely different. And this is where you may throw money away. So how was I able to purchase a lien in the first few minutes by clicking a few buttons? That's what the technology we created called Marketplace Pro. Now, if you remember, I said that at no point tonight will a program be offered to you that you can purchase by going to a website. Also our technology, and I said this earlier. Even though I'm going to show it to you again right now, and some of you are ready to get started and qualify to work with us, so I'm going to give you that opportunity right now also. We do not sell individual packages or individual memberships to Marketplace Pro. The only way we allow you to get access to this if you're working with us in a hands-on approach, as I mentioned before, which is qualifying to work with us. Okay, now for those of you, as I start to show you this now, I'm going to turn my camera back off. I'm going to go back online, show you exactly how this works. But for those of you that already saw the technology, you're saying to yourself, okay, I've seen it, I know I need to do it, I'm ready to get started, and hey, I may have a ton of money to do this, or I don't have a ton of money, but I know that I want to take start on this. If you go to the announcement section, I've got that phone number in there already, so you can call them right now. Don't worry about your missing here. So they can set up that appointment for you and have that full-on conversation with you so you can qualify to be one of those 30 to work with in a hands-on approach. Those of you who can see more, remember that phone line is only going to be open for a few minutes tonight. When we get half past the hour, they will shut that down. So make sure you take that number and call it as soon as possible. But if you're looking at the inventory right now, take a look at Florida by itself. 409,000 tax lien certificates. The face value of those combined is $877 million, which means that's $877 million in delinquent property taxes in just the state of Florida alone. And that's against $51 billion worth of real estate. And then if I click on the down arrow, it breaks it down for you, each county. Now in Florida, each county is the same. It's 18% interest, 2-year redemption period. Arizona, if you saw that above it, was 16% annually, 3-year redemption period. Come down here to New Jersey, it's also 2 years, 18%. But you're also going to notice it's not controlled by counties, it's cities, townships, and boroughs. Now, jump not too far from me, here in Maryland. Maryland is different in every single county. They can change their laws whenever they choose to. And the rates are varied. It could be as little as 4 to 6% annually, or as high as 24% annually, depending on the county. So each one will be different. You need to research it. But this one right here, Harford County, what's cool is instead of just downloading the list that I was showing you earlier, all I have to do is click on where it says Harford, and it will actually break down and give you a interactive list. So you can see this lien right here. Remember, the lien is what you're investing in, not the property. We may eventually get this if a time frame goes by. The lien is less than $3,000. The assessed value of the property is $201,000. You get the satellite view. Over here we have the street view, which I can actually click on over here to zoom in on it. And we can take a look around the neighborhood if we wanted to. You guys have probably used Google Maps before. I zoom back out. I look down. I've got the physical address. I've got the lot and block number, the links directly to the county information, the current owner of the property, when the property was built, when it was last sold. Gives you all that information right here. And remember, assessed value is $200,000, but market value may be different. So they've got a link to Zillow in here also. If I click on that, it opens it up, and you can see that the market value they estimate, or Zestimate, I guess I should say, is $278,000. So it's probably someplace in between. And once again, you're not buying the property, you're buying the lien against it. So we know if this county is 24%, we're earning that, and if it doesn't, then we may take ownership of that property, going through the legal process. And you can see if we start to scroll out here a little bit, zoom out, anything you see with a blue mark, those are all properties that have liens against them in this area. They're going up for sale. So you can see there's quite a few here. Jump over to another one right here. Here's one, $386,000. That's the assessed value. And of course, the market value is close to $500,000. Get out of that one. You can see some crazy numbers in here occasionally too. If I can find this one, there's one for a $22,000 tax lien against a $1.2 million property. Here's one that's $462 tax lien against a $1.2 million property. Yes, they exist. And this is property that's for sale. Now, if you want to buy a lien immediately, that's where we come into right here, where we go to county held liens. And that was the first place that I showed you a little earlier, which was here. Now, this is the first lien that we looked at. Take a look at this one right here. Just to give you an example. I click on details. We know it's a $220 tax lien, 18% interest. The assessed value of the property is $27,000. So again, it gives you all the details here. If you want to buy this lien or a similar lien in this county, we just go to purchase from jurisdiction, takes us right back into the county. And for those of you who may have missed it, click the down arrow. Least expensive lien in the county is $49. Highest price lien is $152,000, earning you 18%. So if you're one of those investors, say to yourself, hey, I'd love to do this, but I really want to buy deeds and take ownership of properties immediately, or even tax foreclosures. We have access to that type of inventory also. So I click on tax deeds, come over here to, instead of just there. Now, if you wonder why there's so much Florida, you saw how much inventory they have. There's just tons of inventory right now in Florida. And I go from residential to commercial. I hit search. And everything that pops up right now are tax deeded properties. So we actually buy the deed to the property. And these are commercial properties. And once again, you can buy them all online. Pretty impressive. So not only does it do the majority of your homework for you, it also does the majority of your bookkeeping. Once you purchase them, as we did earlier, they upload here, and it gives you all the details. So if you don't remember what the property was that you purchased the lien on, all you do is scroll over it, gives you a thumbnail, and then let's say the redemption period's about the end, and you want to evaluate the property to see if you want to take ownership. I just click on this, and it gives you all the details of the property, including comps in the area. So I can't make it much easier than this, everybody, and show that you can work with any budget by just clicking a few buttons from home. The education is important, but if we can start showing you these assets, it allows you to get started within the next few days for many of you. And part of the reason I started off by showing you a very inexpensive lien, something less than $100, is to show you it's available for everybody. It levels the playing field, right? It eliminates a lot of those excuses that we have for ourselves that we can't afford it when I show you that. Because the reality is human nature is to find 1,000,001 reasons of why we can't or shouldn't do something, instead of just the one reason we should. For me, it's my family. For you, it may be the same. Maybe to get out of that dead-end job, whatever it is. Maybe it's to get married, or whatever you want to do. Look for that one reason why. That inexpensive lien